Inflation is not gone. Capital already knows it. Money moves before headline, before economists, before portfolios are rebalanced. And this chart you're looking at right now is not forecasting inflation. It is confirming a rotation that is already underway. Forget fear, forget speculation, forget about regime recognition. On that screen, you are looking at the Inflation Beneficiaries ETF, INFL. This is a rules-based basket designed to benefit from inflationary environments, typically including exposure to energy, infrastructure, materials, real asset-linked equities, price power dominant cash flow businesses. This is not retail momentum. This is a macro positioning, and price is telling you something extremely important. So let's walk through this thing very slowly and visually, because this is where most people get it wrong. On the x-axis, what do we have? Well, the x-axis runs from late 2024 to early 2026. This matters because it covers the post-rate hike digestion. The post-rate hike, remember that? When the Biden administration took a little bit too long to raise rates. Disinflation optimism, and now renewed inflation pressure. Why inflation pressure? Need I remind you that the 10-year yield is above the risk, the Fed fund rate. That usually doesn't happen, meaning they don't trust the Fed anymore. So you're looking at a process here. On the y-axis, you're looking at the price, from mid-30s to early 40s and beyond. Prices is a final arbiter, not CPI, not press conferences. Okay. The large green cup formation. This is the most important structural feature on the chart. The long green curve represents a multi-month basis pattern, often called what is a rounded bottom or an accumulation cup. What does this tell you? Well, it tells you weak hands exited early, capital accumulated quietly, and volatility expressed was the volatility was compressed. You're looking at an ETF, an exchange traded fund that captures everything there is to do with inflation. So this is institutional behavior, not retail chasing. Look at the horizontal resistance line. Notice that the flat white resistance line near the prior high. This is where INFL previously failed. This is where sellers once dominated. Markets remember these levels. When price returns here after a long base, it answers a single question: are sellers still there? And the breakout and the red arrows. The red arrows highlights failed prior breakout. This matters because they shake out impatient buyers, they discourage trend followers, and they reset positioning. By the time the real breakout happens, participation is thin and conviction is strong. So basically what you're seeing, they are investing in inflationary beneficiaries, i.e. companies that will benefit from inflation because they believe that inflation is on its way back. And that's potentially a bad sign because you cannot have inflation and low rates. The right side cup and the break to all-time high. Now look at the right side of the chart. A smaller, tiny, tighter cup forms near the highs. This is a classic trend continuation behavior. Then price breaks out non-marginally but decisively all-time highs. Markets do not make new highs in assets that investors do not believe in. Why this signal matters? Here's a mistake most investors make. They treat inflation as a number, not a system. Inflation is not just CPI. It is labor bargaining power, energy volatility, geopolitical fragmentation, reshoring costs, fiscal dominance, capital scarcity, and in an inflationary regime, growth stocks lose valuation leverage. Their margins compress unevenly. Real assets regain relevance. Pricing power becomes king. This chart is capital saying the low inflation, long duration regime is no longer the dominant assumption. So, why this is happening quietly? Notice that there's no panic, no volatility spikes, no policy shock. This is precisely when rotations begin. The most important asset reallocation happen when narratives are stale, when volatility is low, and when consensus is comfortable. The INFL breaking out before inflation panic is the tell. You haven't heard about inflation panic, right? It's coming. This chart is not telling you to sell everything. It's saying rebalance your assumptions. Historically, when inflation beneficiaries lead, value outperforms growth, commodities outperform duration, and cash flows beat promises. Real assets regain strategic importance. Ignoring this rotation is not conservative, it is exposed. Every major macro regime shift begins the same way. Price moves first, narratives follow, portfolios adjust last. This chart is not loud, it is not emotional, it is disciplined, and it is telling you money is already rotating into inflationary assets, meaning they're going to benefit from inflation. The only question is whether you recognize it in time.